How do you write commentary for the board? Or rather, how do you write commentary in your management accounts? So today I want to really drill down to the actual commentary part of the financial statements, or in particular the management accounts. And I want to focus on how to make this part of what you're pulling together each month interesting to read. It's really important that you spend a bit of time putting your commentary together so that it doesn't sound boring, so that you are demonstrating your knowledge and your skills to the CEO, the leadership team, board, and investors. And you're really demonstrating that you understand the business, you understand what's driving profitability, you're understanding the risks that the business potentially has, and you're also able to add value and demonstrate your leadership skills. So even though the commentary may sometimes feel like an afterthought and you're just putting something together really quickly at the end of pulling together all of the numbers, it actually is worthwhile just spending that bit of extra time constructing a well thought out commentary for the board, investors, and leadership team. You may find that some leaders and some members of the board aren't overly financial and may not even understand the financials well enough and may just skim that part, but really focus on the commentary. So you want to make sure that it does have all of the main takeaways and it is enough for those particular board members that you're able to give them what they need, and you're also to communicate what you want via the commentary and not just relying on the numbers themselves. I'm going to go through the 5 whys today. The 5 whys is also what's included in my new book. I got a copy yesterday, so I'm a bit overexcited. And I did unbox it as well and upload that. But there is a waiting list. This will be available very and there's going to be a promotion on the first 2 days. So if that sounds interesting to you, then I'll leave the waiting list below and you can join that and you'll be notified as soon as that becomes available. But besides writing books, my name's Alysha Randall and I'm actually a fractional CFO for Fast Growth Consulting, and I also train new and aspiring finance leaders and CFOs of startups and scale ups. So if that sounds like something for you, if you're a qualified accountant and wants to work as a finance leader in a startup or scale up, then this channel is definitely for you. So as I mentioned at the beginning, I'm very interested in just spending a little bit of time talking about the commentary that you're writing for the board, for your leadership team, for the CEO, and sometimes investors as well, in both the management accounts and the board reportings. I basically want to introduce to you the concept of the 5 whys here, and also talk about what are your main takeaways. So when I am thinking about writing commentary for the board, I sometimes find it easier to do a traffic light system. So your red, amber, and green. So in the reds, what are the things that didn't work so well this month? What are the things that are work in progress, so that they met expectations? And what are the greens? What are the things that the company really overachieved? And that this doesn't necessarily mean purely financial. It may not come just from your P&L, balance sheet, and cash flow statement. It's probably worthwhile taking a look at your KPIs as well and looking at the trends in the KPIs and working out if there's anything in there that would be worthwhile communicating to the leadership teams. The other thing I really want to talk about is the 5 whys process. And what I have seen in many commentaries, particularly for brand new leaders or finance managers, financial controllers who are starting to write the commentary for the leadership teams, is that the commentary is a little bit boring and it doesn't really add anything over and above what the numbers are telling you. And what I mean by that, there will be statements in there such as the revenue was 5% behind budget, but 2% ahead of prior month. The gross margin is the same last month and stable at 75%. The sales and marketing costs overspent compared to budget, largely due to direct marketing. Those kind of comments. Now, you and I know as accountants that we could write that commentary just by reading the financial statements. And there is nothing added over and above what you can already read in the financial statements. Now, the commentary is not supposed to do that. It doesn't give you any insights. There's no storytelling. There's no understanding of what that means. There is no understanding of what is going to happen in the future. So what you want to do as a finance leader is take a look at the management accounts and check if these variances and if these numbers are going to tell you anything about the future. Because I can tell you right now, the board and the leadership team are more concerned about what the numbers are going to tell us about the future rather than what's already happened. Yes, they care about what's already happened. Historical numbers are, of course, useful, but they are always forward-looking. And therefore, you as a finance leader should also be forward-looking. So I wanted to take you through an example. So I've got an example here of the 5 whys method that you can employ, or you can encourage your team to employ to help them with their first draft of the commentary. So let's have an example where the cost of sales labor costs really increased month on month and were over and above the budget. And so we want to write commentary about this variance. So the labor cost in the cost of sales were above budget and above month on month potentially, and your gross margins weren't as good as what they could have been. So the 5 why method is basically asking why up to 5 times until you get to the root cause of the variance. So let's start with this first example of the cost of sales labor. So question 1, why? Why did the cost of sales labor increase? So say, for example, you may be going to the warehouse manager or the COO and have this conversation if you don't know the answer already. Maybe you can have a look at this in the payroll, for example, and you can see that the overtime that was paid increased. So there's a higher than normal overtime. Okay. You could, and I've seen this plenty of times, write in the commentary, oh, the labor costs in cost of sales was higher than normal because there was a higher overtime. Now that gives the management team a little bit of information, but it's not telling anyone, is this overtime going to happen every month? Was there problems in the warehouse? What is the reason for that? It's giving a bit of insight, but not enough. Okay, so we ask again, number 2, why? Why has overtime pay increased? And the warehouse manager may say, oh, because we're missing some deadlines. So say, for example, particularly in distribution type company, there may be deadlines for the warehouse team. So when an order comes in, it has to go out within the day or it has to go out within 24 hours. So the warehouse manager may say, oh, look, we were missing our SLAs, our key performance indicators. We were missing our deadlines. So we had to get people on overtime so that we could hit our service levels. Okay, so why were you missing your deadlines? Again, we could put this in the commentary up to number 2, but it's still not giving information onto the root cause. So we ask why again. Why are we missing these deadlines? And the warehouse manager, or you may know yourself, is because we've taken on more projects. So there's more demand, so we have to create more supply. Again, can include in the commentary, but maybe we should dig a little bit deeper. So why have we taken on more projects? Could be because we've onboarded new clients. So we've got more clients, more demand. We have to meet that more demand. So we need to pay for more overtime, which has resulted in a higher number of labor costs. Okay, so we might ask the why one more time for 5, and that is, why have we onboarded new clients? Which is a fair question. Why have we got all of a sudden an influx of new clients? We do want to know that, because if taking on new clients, it's not that it's a bad thing. We just want to know how we did it so we can keep doing it, basically. And it's because our marketing efforts have been really successful this month. So what that all boils down to is we can talk about the fact that we have got a huge amount of demand. In order to meet that demand, we've had to pay the higher price of overtime, and overtime costs more than regular time. And it also is not sustainable. So it's a good and bad news. The good news is that because we've got more clients, our marketing efforts has been really successful. Potentially it might be worthwhile having a look at the CAC on those clients, and therefore we'll be generating more revenue. On the flip side, the warehouse team or distribution team has been struggling because there has been an increased demand, and so they've had to utilize the overtime. So then there will be, for the future, if you write something around this type of results of your questioning, they'll then trigger a conversation of, this marketing campaign, was it an efficient one? Was the CAC really good? And if it was, can we do it again? And if we can do it again, can we do it a third time? And can we expect the same kind of results? Then if we do it again, how are we going to deal with the increased demand? Because we can't rely on the operational team to work overtime 25 days a month. So is there a way of increasing the capacity, because we feel like there's going to be increased demand if we keep going down this path? And so basically your commentary is driving this conversation. It is highlighting all of the different elements across the business, and it is showing the leadership team what is going on, how it's affecting both the team efficiency, and also when one thing happens in one department, obviously affects the other department. So there needs to be cohesion, there needs to be a cooperative workaround going forward. So you can see that this will therefore make your commentary not only more interesting, it will uncover lots of problems that happened and benefits that happened in the most recent month. And it will also prepare the leadership team to have a consideration for all of those things going forward. So this campaign worked really well. We need to make sure operations can deal with the increased volume. And can we repeat that? Do we need to have a more permanent solution? So just by asking 5 questions of why, you can see how your commentary can be super boring or super interesting, really add value, really drive conversation with the leadership team, and ensure that you are part of that conversation, and also highlight your leadership skills. So hopefully that example makes sense. Of course, you don't need to ask why 5 times, but you may be prepared. You may have to get yourself prepared to ask why 5 times. Sometimes you can uncover the root cause in 3 to 4 times, but generally I find you do have to go up to 5. It doesn't matter if you're a manufacturing distribution company, or if you're a tech SaaS company or a fintech company. The 5 why method works across the board, and it doesn't matter if it's operations or if it's commercial or if it's payroll or what it is, or it's a key supplier or it's a tech subscription bill. All of these things can be investigated using the 5 why method. Now, one negative thing I will say about the 5 why method is it does take longer. in order for you to do your job properly, if you don't already know the answer to these questions through your business partnership, and I'll leave a link above and below for business partnership video, then you will have to go to these people and ask why. You should also be mindful that if you haven't done these outside the finance department kind of tasks, and you've only really spoken to people outside your department when you're chasing down receipts or signatures, then people sometimes may be defensive when you're asking the question why. So just be prepared for that. Make sure that you let them know why you're asking these questions. It's basically, I need to understand the numbers because the numbers are showing me this, and I need to decide whether the numbers are accurate or whether we need to write a bit of commentary. So you do need to have a bit of empathy. I've recently mentoring a financial controller on my course. She was shocked when I asked her to do the 5 whys, because her initial response when we went through the commentary was, I don't know the answer to that question. And so when I said, go and ask somebody, it really took her a moment to realize that she could do that. And she has noticed that because she hasn't done that before, she's just been the helpful financial controller and only asked people for receipts really, and is now trying to gear up for the finance director role. It did take a little bit. So just be aware of how you're communicating if it's the first time you're doing this. If you're asking questions all the time and you have a strong relationship and you're already doing business partnering, this won't be a problem. But I just thought it's worthwhile mentioning, because if it's the first time, you just need to be a bit careful. It doesn't say that you're not supposed to do it. You absolutely should be doing it if you want to be a finance leader, but just be mindful that people may be a little bit defensive the first time, and then they'll get used to it. Anyway, hopefully that is useful. As I said, the 5 whys is one of the little tips I put in this book, and I'll see you in next week's video. Thanks, everyone. Cheers.